Have you ever woken up, scanned the morning headlines, and felt a knot of worry twist in your stomach the instant you saw the words market crash or soaring tariffs? Imagine watching decades of careful saving and investing get rattled in just a few hours because of decisions made halfway across the country. It's enough to make anyone uneasy, especially if you rely on your portfolio to maintain a comfortable lifestyle in retirement or to help you build a lasting legacy for your family. With global trade tensions often flaring up, each new policy announcement can send stocks tumbling or spiking without any warning. In times like these, holding on to a sense of financial security can feel like trying to grasp smoke in your hands. If you've ever felt that jolt of panic or worried that a lifetime of diligent planning might teeter on the brink of turmoil, you're not alone. The real issue here is more than just numbers on a screen. It's about preserving your well-being, your lifestyle, and your confidence in the face of unsettling volatility. We're here to talk plainly about what happens when the market's bright green ghost sign suddenly flips to red, and more importantly, we're here to figure out what we can do about it. No long introductions, no beating around the bush, just a direct dive into the heart of what you stand to lose if you give in to the panic and how you can come out calmer, more informed, and even better positioned for growth when the storm subsides. The worst part about economic uncertainty is how easily it creeps into every corner of your life, magnifying common worries and turning them into full-blown anxieties. Maybe you've been planning a once-in-a-lifetime trip, expecting that your retirement account would comfortably see you through. Perhaps you're thinking about helping your grandchildren with college expenses or want to ensure a generous nest egg is left behind for your loved ones. Suddenly, an announcement about new tariffs or a jarring drop in the stock indexes can make you question every plan you've painstakingly laid out. And that's not just a financial toll, it's a mental and emotional burden taking up space in your head and keeping you awake at night. The further danger is that economic ripples can become waves, triggering tighter credit conditions or inflationary spikes that harm businesses and individuals alike. You might see the price of goods climb or credit options shrink. Even if you only hold a modest amount in stocks, bonds, or mutual funds, these movements can erode your future security. And what if you take no action at all and everything escalates? That uneasy feeling you have can turn into outright regret, with you thinking, if only I'd done something sooner. It's not an exaggeration. Entire life plans, from how you spend your later years to the legacy you leave, can hinge on how you respond or fail to respond when markets take a dive. The clearest example of such an unsettling scenario erupted when President Donald Trump announced sweeping tariffs on various trading partners, rattling the market's sense of stability. Almost overnight, fear of a looming trade war surfaced, driving major indexes like the S&P 500 into a tailspin. In that particular instance, stocks sank more than 10% from their peak, a jolt that took many investors by surprise. While it might seem like just another round of short-term volatility, these tremors often serve as signs that deeper instabilities could bubble to the surface. If you think back, there have been similar cautionary tales throughout history. Consider the bear market from 2007 to 2009, when the S&P 500 plummeted more than 50%. People once confident in their retirement dates scrambled to push them back. Businesses shuttered or cut staff. Real families dealt with real hardships like losing homes or draining savings just to stay afloat. It's not a scare tactic, it's reality. Investors who once felt firmly in control discovered how quickly a few fiscal and policy decisions could redefine their entire financial outlook. Time and again, we've seen how those who cling to calm often end up benefiting from lower prices, capturing valuable long-term gains once the dust settles. But that doesn't happen by accident. It happens by recognizing how urgent it is to keep your cool and by understanding that these problems, tariffs, trade wars, and market dips can rapidly spiral if they're not viewed with both caution and composure. Of course, it's not enough to talk about the fear alone. There's a reason Buffett famously invoked the lines of a 19th-century poem when advising people on how to handle falling stocks. In times of turmoil, clarity comes from timeless wisdom. If you can keep your head when all about you are losing theirs, yours is the earth and everything that's in it. The partial answer, if we can call it that, lies in reorienting ourselves toward the long game. After all, history suggests that while markets can descend quickly, they also tend to recover. Corrections, defined as drops of 10% or more, aren't bizarre outliers. They're a natural part of the market cycle. Overreacting could mean you miss out on the bounce that has historically followed, not to mention the compounding potential of staying invested. It's like living through a thunderstorm. You can't enjoy the clear skies after the storm if you panic and run to an ill-considered hiding spot where you might get stuck. Still, by taking a measured approach, sticking to diversified portfolios, rebalancing at regular intervals, focusing on fundamentals rather than frantic news cycles, investors put themselves in a position to ride out the turbulence. Consider these initial strategies as your partial toolkit to help preserve both your sanity and your savings. But before we dig into a complete framework for addressing sudden market drops, let's acknowledge that fear can be an effective motivator, and if we don't properly address it, it might steer us into poor decisions. What's at stake here is not just immediate comfort, but long-term security and the promise that you won't be forced to make drastic changes to your lifestyle when you can least afford to. There's something else we need to think about. Our own reactions can magnify market ripples into personal earthquakes. People might feel too smart for panic selling, yet they'll still hesitate to make crucial investments or re-entries until the right moment. The trouble is, as Buffett once cautioned, the market doesn't necessarily pause at yellow. It can speed from green to red in an instant, leaving even cautious optimists flat-footed. If you wait for obvious clarity, you could miss the best buying windows when prices are discounted, effectively passing up the very deals that are likely to fuel your portfolio's growth in the future. Worse, you might let negative news shape your every move, forgetting that not every fluctuation needs a response. Another danger is psychological, letting past market scars drag you into gloom, or trusting too heavily in bull market euphoria. You end up either doubting every positive sign or chasing every hot tip, both of which can hurt you. The point is, even once you know that staying calm is key, new layers of fear can keep creeping in, especially when headlines keep turning bleak. That's why a solid plan is crucial, one that not only reminds you to stay the course but also explains why it matters, both in your financial life and your personal well-being. The truth is, ignoring the deeper roots of these worries can leave you just as vulnerable as the person who sells in a panic. It's in this space, where knowledge meets discipline and perspective, that real solutions start to take shape, letting you stay steady and possibly even thrive. A robust solution means constructing a flexible, long-term investing strategy and pairing it with an unshakable mindset. It also means accepting that market downturns are inevitable, a natural part of economic cycles that can actually offer extraordinary opportunities, as Buffett himself has suggested. Instead of seeing these dips as reasons to exit, you might see them as a chance to buy good companies at a discount, a philosophy that has made many patient investors quite successful. Yet the pragmatic side must also be addressed. Set aside an emergency fund, review your spending, and talk with a financial advisor about risk tolerance. Strengthening your financial position doesn't happen in one flashy move. It happens through consistent actions, like contributing to retirement accounts even when the market looks grim, or rebalancing quarterly to maintain the original asset allocation you decided upon when you were calm. A well-rounded approach includes understanding fundamental indicators, keeping an eye on economic data rather than just alarmist news stories, and refusing to let short-term noise derail your long-term goals. It's the alignment of clear strategy with a confident mindset that transforms you into someone who can look at alarming headlines and say, "I've prepared for this." You'll find it's easier to hold onto your clarity and not let your stress balloon, which in turn preserves your quality of life. Much like Kipling's line about waiting and not being tired by waiting, you'll discover patience and resilience are more valuable than any quick fix. By exchanging real-life tips and stories, we can help each other stay grounded. Think of it this way, the more we collectively understand about each other's successful strategies or cautionary tales, the stronger we become as a community. Everyone here gains from the collective knowledge that only you can provide. That's precisely why it's worth your time to reach out. And while you're at it, consider subscribing to this channel. Your subscription not only helps you stay informed with timely, straight-talking updates, it also signals to the community that we're all in this together, learning and growing side by side. Sharing keeps us sharp, it keeps us empathetic, and it keeps us prepared. As we wrap up, remember that short-term chaos doesn't have to define your financial journey. The markets might reel from trade wars or sudden shifts in federal policy, and the news might trumpet doom and gloom around every corner. But the real secret, the one whispered by savvy voices in every generation, is to remain steady. No matter how loud the storm becomes, your best move is to keep your head and trust the resilience of a well-built strategy. Thank you for spending these moments with me, and I hope you walk away feeling more empowered than when you arrived. Whether you're nearing retirement or simply safeguarding the future of your loved ones, never forget that knowledge coupled with measured action is your most valuable armor. Keep your mind open, stay informed, and keep forging ahead. A sincere thank you for watching, stay safe, and remember, sometimes all it takes is a steady hand and a calm heart to transform a crisis into your next big opportunity. Until next time, take good care.